FedEx cutting its full-year profit and revenue forecast as it reported mixed third-quarter results. Joining us now, Jonathan Chappell, Evercore ISI Senior Managing Director. Jonathan, great to have you with us.
Thanks for having me.
There was a lot not to like in the FedEx report, including the guidance, which was lowered on top of the, a bit lowering guidance the last time around. And I'm wondering at this point, how much of this will be, in your view, a FedEx problem and how much of this is an economy problem?
I think the vast majority of the guide cut is a macro problem. FedEx laid out 2 years ago a plan to cut $4 billion in structural costs. I don't think anybody really gave them credit that they could actually execute on that. And here we are 1 quarter away, and they're on path to meet that. The problem is the volume outlook, the industrial economy as it relates to both their Federal Express business and their freight business, international especially. All of these headwinds are really kind of adding up. So they've controlled the controllables, which is what this stock was all about for 2 years. It's just that the controllables now are starting to run out a little bit, and they're a lot more reliant on the uncontrollables. And that's both, uncertainty in trade and cost inflation, which is offsetting some of their company-specific cost cuts.
The lowered guidance doesn't include the impact of tariffs that are slated to take effect on April 2nd, Jonathan. So there is downside risk to that lowered guidance. And I'm wondering, in your view, what is that risk on a percentage basis? Or maybe you have another sort of guidance range that would incorporate the tariff risk.
No, I think that premise of no escalation of tariffs is not baked in. And I think trying to pinpoint exactly what a tariff impact might be is a bit of a fool's game at this point. We just don't know what it's going to look like, the duration of it, et cetera. What's interesting is the majority of FedEx's business is within the U.S. They are obviously a very diverse global franchise, but no country outside of the U.S. represents more than 2.5% of their business. So I think it's more of an uncertainty fear factor right now. I think there's some other tail risks associated with this business as it relates to Amazon continuing to build out their logistics network that are really more concerning longer term than maybe the short term fears around tariffs. Clearly, if we get to April 2nd, there's global reciprocal tariffs. It really starts to distort global trade. We'll have to try to put a best guess on it. But at this point, I think it's too early, and it feels like the policies may change, several times before we get to a point where it actually impacts the financials.
Right. Which is better to weather the storm being the economy as well as tariffs, UPS or FedEx?
It's quite similar, honestly. I mean, I think it would impact both of them pretty similarly from a financial standpoint, from a multiple standpoint, from a stock price perspective. I think what's interesting is it feels like FedEx has taken a bit more of a hit in an equity on the equity side from the tariff fears, whereas UPS has taken a much bigger hit from the Amazon tail risk, and frankly, they're both impacted quite directly from them. So it's kind of just like choose your poison. But both will be impacted by it. And what we found, and we found this really for the last 2 years, even before the tariffs, before the Amazon tail risk came to the fore. Outside of FedEx's $4 billion cost-cutting, idiosyncratic path, outside of their LTL spin that they announced in December, long-only institutional investors have been very reluctant to buy into these stocks in general because of some of those longer-term fears. And you've seen that in the multiples, but these are the lowest trading transport stocks out of any segment that I cover, with some of the biggest market caps and global franchises. So a lot of these things are coming to roost. There's a lot of moving parts. I think it'll cause a lot of volatility. And unfortunately, I think it's very difficult to step in until we have a lot of clarity on 26 and beyond.